Good day and welcome to the Greenply Industries Limited Q2 FY2024 earnings conference call hosted by Asian Market Securities Limited. This conference call may contain forward-looking statements about the company which are based on beliefs, opinions and expectations of the company as on date of this call. The statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. Actual results may differ from such expectations, projections, etc., whether expressed or implied. Participants are requested to exercise caution while referring to such statements and remarks. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Karan Patelia from Asian Market Securities Limited. Thank you and over to you, sir.
Thanks, Seema. Hi, everyone. Good evening. On behalf of Asian Market Securities, we thank you for joining us on the Greenply Industries 2Q and first half FY24 conference call. In the panel today, we have Mr. Manoj Tulsian, Joint Managing Director and CEO, Mr. Sanidhya Mittal, Joint Managing Director, Mr. Nitin Karani, CFO, and Gautam Jain, VP Strategy and IR. May I now invite Manoj sir to begin the proceedings of the call. Thank you and over to you.
Thank you, Karan, and good evening, everyone. It is a pleasure to have you all on this call. I will be updating you on Greenply's operating and financial performance for Q2 and H1 FY2024. First of all, I am happy to share with you that we have crossed rupees 600 crores in consolidated revenue in this quarter, which is the highest ever for Greenply in a single quarter. I am very confident that this trend will continue in the upcoming quarters, and with this, our consolidated sales for this financial year will approximately grow at a CAGR of around 22% over FY22 and a CAGR of around 13% over FY20 if we are to compare the performance against the pre-COVID era. Now I'll share some highlights of the business-wise performances. In our plywood business, revenue growth was 9.7% on a YOY basis, majorly driven by 11% sales volume growth. On a half-yearly basis, we have achieved approximately 7% volume growth. With this, we are fairly confident of achieving our annual volume growth of 8 to 10% as guided earlier. On the margin front, our adjusted core EBITDA was at 7.9%, which includes a one-time expense related to entry tax amounting to rupees 3.2 crores, which is non-recurring in nature. In addition to that, we have booked major expenses related to our new brand ambassador campaigns and TV ads. The raw material cost witnessed an increasing trend in the last quarter. However, we see stabilizing timber prices here on. We have taken some price hikes during the last quarter in certain product categories. The full impact of the same would be visible in H2. Considering the above, we expect margin improvements in H2 FY24. With the increase in turnover, despite the increase in our turnover, our working capital is at a healthy level of 31 days for the plywood business. And we will continue to focus on the same. Moving on to MDF business, I am extremely happy to share with you all that we have achieved cash positive performance in the first full quarter of operation itself. During this quarter, our EBITDA margin was at 15.5%. We are also confident that we will meet our indicated 1 lakh CBM sales volume for FY24. More details on the MDF business will be shared by Sanidhya later on. Our Gabon business continued to be under pressure due to severe political unrest in the initial part of the quarter and also supply side challenges. Although we are working hard to come out of the situation and closely aligning with the policies of the newly constituted government, we don't see an immediate turnaround. Hopefully, we should be able to provide you better directions by the year end. On a consolidated basis, our net debt levels are at rupees 713 crores, which is well within our guided peak net debt level of 750 crores. In the upcoming quarters, we will also be making investments in our furniture hardware JV. However, despite the same, we are confident of remaining below our indicated maximum net debt range of rupees 750 crore, including such investments. We are committed to maintaining our brand leadership position, and accordingly, we are thrilled to have Junior NTR as our brand ambassador. I'm glad to share with you that both Greenply and Junior NTR share mutual values of sustainability and a deep commitment to the environment. We are confident that his charismatic pan-India image will help us reach a wider audience and create greater awareness about the critical role of eco and health-friendly products such as our zero-emission plywood range and MDF range within the home interior space. With this statement, I would like to hand it over to Sanitya to provide more insights on our MDF business.
Thank you, Manojji, and good evening to everyone on the call. In our MDF business, we are progressing well. I'm happy to share that we are at positive cash flow from operations in last quarter, much ahead of our original plans. Its results are meticulous planning and team effort, brand strength, and commercial discipline. During the quarter, we have installed a few short cycle presses as well for production of prelam MDF boards. In addition, we have launched other value-added product categories like carb and boil pro. Being a premium player, we will introduce other innovative products and value-engineered products to serve all categories of consumer segments going forward. In the last quarter, we almost sold 31,000 CBM with a blended realization of 28,500 per. As our share of sales of value-added product increases, the realization should also increase consequently. For the full year perspective, we are well on course of achieving sales volume of 1 lakh plus CBM as guided earlier. With this perspective, I would like to open the floor for Q&A session. Thank you.
Thank you very much, sir. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. We take the first question from the line of Sneha Talreja from Nuvama. Please go ahead.
Hi, sir. Good evening and thanks a lot for the opportunity. Just a couple of questions from my end. In your opening remarks, you said that timber costs have already started cooling off. Could you highlight this further, and where do we see now our margins going ahead? And have we taken substantial price hike to offset now any further timber costs from here?
Hi, good evening, Sneha. So first thing, I'm not saying that, the timber prices will start coming down. What we are now feeling is that timber prices will possibly stabilize because it's already very high. And, we don't see, because to some extent, the popular prices have slightly corrected, which will slightly ease out the pressure on the eucalyptus also going forward. So keeping that in mind, I'm assuming that possibly the timber prices have peaked. It's just an assumption, our internal discussions. We may go wrong also on the same. In terms of price increase, we have taken, as I said in the speech, we have taken price increase on some of the product categories, and which was taken in the month of August partially, and on some of the products in September also. So this quarter, it will slightly start reflecting for the full quarter, so that will help my margin to improve, and even for quarter 4.
Understood. And secondly, on the MDF front, firstly, congrats for achieving a 15% EBITDA margin and being cash positive in the first full quarter of operations itself. You've already specified you'll be, doing 1 lakh CBM this particular year. Given that you're already 15% EBITDA margin, now where do you see the EBITDA margin trend? Given that your overall guidance, if I'm not wrong, was around 22% with full operation. So where do we see the EBITDA margin trending now, given that it's 15% already?
Sorry, we didn't get your questions. Can you please?
Your voice is not absolutely clear, so maybe you can just repeat the question.
I was saying that you've already achieved 15% EBITDA margins, which is phenomenal in the first quarter of full operation. Just wanted to understand, given that now utilizations will be further increasing, where do you see this trend going forward? Do you maintain the earlier guidance, or do you want to inch it up from here?
I think, I don't remember mentioning 22%, but our basic focus was that, whatever others are making, we will be making very, very, similar margins compared to any other branded player in the sector. So we are still very confident that going forward, once we are at full scale, we will be making the same margins anybody else is making, because, currently there's a lot of import. The market is in oversupply. You don't know how much fight or, what the pricing tomorrow will be. But I'm very sure and confident that whatever the market is making or other players are making, we're definitely going to make as much as they are going to make.
And I think, Sneha, just to add to this, 22%, you would have said, when we are doing a full-fledged operations, you may expect that type of a margin maybe next full year of operations or around that number. Okay, don't hold us again next year, first quarter itself, that we said 22%. But I think a full year of operations where maybe once we are targeting around, 700 odd crores of sales, that type of a margin, assuming that, similar margin trend continues as the market is today, will be possible. And in H2, definitely our margins profile will be better than, quarter 2 also. So there would be some incremental margin performance in H2 also.
Understood, sir. Thanks a lot, sir. This will help. All the best.
Thank you.
Thank you.
Thank you. The next question is from the line of Udit Kajiwala from Yes Securities. Please go ahead.
Yeah, hi, sir. Congratulations on a great set of numbers. So firstly, on plywood, we have grown. Could you, let us know what is the demand scenario? Is the demand more in the premium end, or it is in which of the brands have we seen the major growth coming in?
Hi, Udit. Thank you, first of all. No, the premium end side demand we have not been able to see. There has been a drag on the premium end. Maximum, the total growth, what has happened is in the value segment only.
Got it, sir. So do you see this mix also improving? Would it aid to plywood margins as well with the change in product mix?
Well, look, to some extent, slightly it is also reflecting in this quarter itself. Okay. Of course, we had some one-off expenses. Of course, we are also doing a higher spend on marketing side, which I think I mentioned around a couple of quarters back that, we would be investing more on the marketing side. But yes, there is some impact of the product mix change already reflected on the margins. Now, as I said that we have taken some amount of price increase in the value segment only. Okay, that will help us to slightly improve the margins. If there is some cool off in the raw material prices, it will further help us to that extent. And yes, our efforts on growing premium still continues. Yes, maybe I can say that as a team, we have not been successful in the same. But there is a decent amount of effort which is going on to improve and bring growth in the premium segment. So the moment, if it happens, then that will also add up to my incremental margin profile.
Understood. And sir, in MDF coming to it, specifically right now our value-added portion is lower, of course, because we have just started. So are we getting, what is our placement of prices versus the imports or the current domestic players in the like-to-like products?
I think I'll answer this. We are very much, priced at par with current domestic players. In certain markets, as an entry strategy, we have priced ourselves about 2.5% cheaper than competition. However, that is for a very short period, as an entry strategy for this financial year. From next year, our strategy will be to sell all products at par with competition, if not higher, because Greenply is a player who's always believed in selling the value added and the branded goods, so we don't believe in selling cheap. However, MDF, we are selling 2.5% on an average cheaper, which is our entry strategy.
Okay, and what would be the same versus the import pricing currently?
I think import pricing will be substantially lower than, we believe around 19,000-20,000 rupees per CBM is the landed cost at an importer's warehouse. And, our average realization in interior grade, which is like to like when we say 19,000-20,000 for them, is selling in the trade for about 25,000-26,000. And, the other value-added products are selling at even higher. So, and we are very, very clear and focused on the value-added segment. So, as we grow the value-added segment, you will see our blended realization also pretty much at par with the competition. By the end of the year, you'll see us getting there.
Got it. And so lastly, on the furniture hardware business that you mentioned in the opening commentary, could you explain what is the business strategy or, any plans over here and what would be the size of investment?
So, this I think we announced previously also. We have signed off a JV with a Turkish partner, Samet. They are the leaders in their category in Turkey and have, exports in more than 22 countries from Turkey itself. So it's a 50-50 JV. And so we'll bring in the products on a 80-20 concept. The 80% selling, fast-selling products is first, where we will start manufacturing those products in India. And the 15 to 20%, the slow-moving, will continue to import from them till we see a level of viability. The whole project will come over the period of next 4 years in terms of, phase 1, phase 2, phase 3. And as of now, the estimates what we have put together, we would be closely investing around 300 to 350 crores together between the two partners equally with a portion of equity and debt. And next year, sometime in quarter 1, we're trying to see that if we are able to, commission the plant in end of quarter 1.
Got it. That helps. I'll fall back in the queue. Thank you.
Thanks.
Thank you, sir. We take the next question from the line of Keshavani Karan from ICRA. Please go ahead, sir.
Hello.
Yeah, Keshav.
Yeah. Sir, your sale has been increased from 23% from the last year. So can I just let you know what is the increase in price and volume?
Sorry?
Your sale has been increased by 23% from the last year. So can you just break down into the price and the volume growth?
Sale has been increased by 23%.
Yeah, from the last year. On a consolidated basis.
Okay, on a consolidated basis. So I think that is, Keshav, not the right way of looking at it, because one, last year base we didn't have MDF business. MDF business only started in first quarter of this year. And in quarter 2, we have done close to around 90 odd crores, 89 crores. Okay. Quarter 2, we have done around 89 crores, which is straight away addition to the overall number, which is reflected in the growth. And in the plywood business, the total growth which we have done is close to around 7%.
Okay.
7% in H1. And the Gabon business has actually not shown any growth. So, that number to some extent maybe it's slightly lower only compared to last year H1.
And sir, what is the percentage of ANSP as compared to last year?
Percentage of?
Advertisement.
Okay. So, on the ANP side, we have in the first 6 months, our total expenditure is close to around 4.1%, which for the last full year was at around 3.1%.
Got it. Okay. Thank you.
Thanks.
Thank you. We take the next question from the line of Mr. Kunal Tokas from Fair Value Capital. Please go ahead, sir.
Hello, sir. Can you hear me?
Yes, you can.
Yes, so I just wanted to ask that do you compete with the paper industry for your raw material, that is wood that comes from tree plantations? And if yes, then how do you see that competition playing out in the future? Like, will it lead to higher prices for all, or will it lead to more area under plantation, which will lead to lower prices in the future?
So I think I'll answer this. So yes, we do compete with paper mills to buy raw material. But however, with the given knowledge I have about paper industry, they can use only debarked material. So for them, it becomes a slightly more challenge to source the same material directly from the farmer compared to us. Well, we in MDF can use material with bark. And also, as far as species are available in the market, I think paper industry has a limitation in the number of species. We are slightly more open to other species as well. So I think our pricing will always be slightly lower than paper industries. But yes, we are competing with them in different areas to buy the material.
And just to add to that, the whole timber forestry farming also depends on a cycle. We are today at the worst end of the cycle, and I think the cycle looks like may continue for another 12 to 15 months. And then you will have good crop coming back. The moment that happens, then the supply side on the timber will improve significantly. That's the assumption, and which happens once every 8 to 10 years. So we are almost at the end of the cycle, maybe last 12 to 15 months. We might have to face this challenge of a higher timber price, and then possibly it will come down. Yeah, it may not come down to the level what it was around 4 or 5 years back, but definitely we feel that it will correct a lot as the supply side improves significantly.
Understood, sir. That was my only question. Thank you.
Thank you. Next question is from the line of Ritesh Shah from Investec India. Please go ahead, sir.
Yeah, hi, sir. Thanks for the opportunity. First, congratulations for commendable performance on the MDF side. So I just wanted to have some more details on the distribution, basically region-wise sales, if you can help with something. You did indicate on our pricing strategy to start with, but how we are making this successful, just wanted to understand that. That's the first question.
On MDF?
Yes, sir.
I think our focus obviously is primarily west because our plant is there. However, looking at North India as well, because NCR is one of the largest markets of MDF, and it is also not very far from the Gujarat facility. So yes, the second focus area becomes North and Upper North and NCR. And obviously, since the brand has its own network in East and South as well, and a set of their own loyal dealers. So yes, certain percentage of sale is coming to South and East also. But our focus in South and East is much lower compared to West and North. Our main markets is West and North. If you want a split today, I would say 75% of our material is getting sold in West and North, 25% is getting sold in East and South. And our prices also in East and South are much higher compared to West and North, obviously to compensate the extra freight we pay.
Sure. So would it be possible for you to quantify how many distributor dealer networks that we have and what is the overlap right now versus the existing network versus new appointed distributor dealers?
I think I can give you an approximation. I can't give you an exact number. I think roughly we'll be working in the like 300 plus direct customers who are already established and are working regularly with us. Number one. Number two, what was the other question you said?
The overlap with the existing network, when we say 300 plus?
Overlap with the existing network, I'd say hardly 20%.
Yeah.
I think 20% dealers must be common out of this 300, and the rest 80% are new and unique who have joined hands with the brand, yes.
That's encouraging. Just a related question, sir. How have we got this volume growth? Is it market share gains? How should we understand that? So,
you're talking about MDF again?
MDF, yes, only MDF.
So I think Greenply is a very well-known brand, and I think because we are a well-known brand and the product is absolutely at par with any other manufacturer in terms of quality, and we have a brand edge, and because of our geographical location, which is west, and which is a unique location, and nobody's in and around west, and because of our aggressive marketing activities and our strategies, I think that is the reason why we've been able to probably eat into the shares others had. I don't think the market has grown so much, especially when imports are coming in so much and people are putting new capacities. I don't think the growth has happened, but yes, definitely we must have eaten somebody's share or the other.
And just to add to that, ultimately the strength for us is one, brand. Second, our presence in West, which clearly gives us an edge in terms of our distribution, and third, service. So one of the reason also that, we went into West was that there is no clutter there, and we will be able to get straight away business from, the western part of the country.
Sure, sir. And sir, my second question was on working capital. Again, the performance has been pretty good. Sir, how should we look at this, specifically if you look at inventory days since June to September, it has reduced. Receivable days has also reduced by around 6 from 48 to 42. Possible for you to segregate it between ply and MDF just to appreciate your performance? Thank you.
So, working capital days, what we have given in my opening speech is primarily on the plywood business. And I think it's 31 days, which I mentioned there. See, depending on a quarter-to-quarter run rate also, that will, somehow change. So maybe, quarter 3 performance may not be as good as quarter 2 because quarter 3 are always subdued. So the same 31 days, maintaining the same principle, which we have, and the commercial tightness which we exuberate, it can go up to maybe 37 or 38 days because of, again, a lower sales base. And quarter 4, again, it can again come back to 32, 33 days. So I think plywood business, we should now look at on an average anything between 35 to 40 days. That's the ideal number which we feel if we are able to operate, it will be a good number. For the MDF, I think it is too early, because we just started operations, we just started, even launching some value-added products, and we are expecting that, the sales will improve in quarter 3 and quarter 4. I would rather say, I don't know, Sanidhya may comment, but I think we should wait for some more time for things to stabilize, and we can give you a better picture for next year, maybe sometime in quarter 4.
Also, like our commercial policies in MDF is very much at par with the competition. So I think, almost, I don't know the exact number, but almost 40% of our total sales is also APD sales. And, the 7-day sales and the 14-day and the 21-day, our credit policy is pretty much at par with the industry. So in credit, there's no relaxation.
That's quite encouraging. Sir, if I just squeeze in, one was on specific to, again, MDF. Will we be looking at exports, and if at all, what is the margin profile that we would be looking at, or will we continue to focus only on the domestic sales, relying on our branded distribution? That's one. And the second question is on sourcing on timber. Basically for the Gujarat plant, I think we had earlier indicated at the very start that we'll source something from south and gradually over time that will reduce. So is that the incremental margin driver? What's the timeline that we should look at over here? Thank you.
So on the timber front, we are very, very clear that, if you look at our timber cost even in the last quarter for MDF, it is pretty much at par with any manufacturer of MDF in northern India. So hence we have no problem to, compete in terms of our costing in north and in west. And it is true that at the moment we are not only sourcing from south, but we are sourcing from some other parts of India also and sourcing from Gujarat. But the way our plantation drive and with the way we have been working since before the plant started, since the financial year, even before the plant started, we are very confident that we will be self-sustaining, So we have almost planted about 2.7 crore saplings before the plant started. And this financial year itself, we are planning, approximately 1.5 crore saplings in a 150 kilometer radius of our plant. So we are working hard enough to ensure our own raw material sustainability and a better future. And see, pricing is all demand supply driven, It will be very unfair for me to comment on that because that will keep changing. But as far as sustainability is concerned and raw material availability and running of plant is concerned, I'm not worried about choosing Gujarat. In fact, from the market point of view, we feel that we've done a very, very good decision by putting up the facility in Gujarat. One, because of ease of working, and second, all the big markets are very, very close to us.
And exports?
Exports, we do not have any export liability as a company. And in the MDF segment, given the domestic realizations, I feel exporting is a waste of time in my opinion. So, we'll continue to sell in the trade. If we are unable to sell and we still want to achieve our capacities, we can always sell plain material in the market, slightly higher than in export prices to domestic importers.
Sure. That's very useful. Thank you so much. All the very best.
Thank you.
Thank you.
Thank you, sir. Before we take the next question, a reminder to all the participants, if you wish to ask a question, you may press star and 1 on your touchtone telephone. The next question is from the line of Arun Baid from ICICI Securities. Please go ahead, sir.
Yeah, so just carrying on the MDF front, we already have 1 quarter of revenue. So ballpark, what's our gross margin in this business, sir, now? Because in Q2, we will mainly have the non-prelam business, just to understand how the gross margins were there, sir.
I think it's too early. I don't think this is too early to comment. I think, going forward with the prelam added, etc., and once we are on full scale, I think then things will really change for us. At this moment, it's very difficult, but if you still want to know for the last quarter, I'm sure Gautam or Nitin, we can give you the number as to how much the gross margin was.
So because the idea to ask that question, I hope Gautam will get back to you with the data, but the idea of this question was because when prelam comes in, our margin should be way, way better because the relations are massive, right, compared to your industrial rate. So just trying to get that, because if your Q2 numbers are pretty good on the MDF front, so Q3 you should get some incremental revenues from prelam, and Q4 should be much bumper, which is typically the better quarter for across the board. So just trying to get that because then your guide, margins without prelam is at 15-16%. We should be way better than that. It's this year itself. So that was the idea to understand.
Quarter 3 also in September we have sold. We have sold Arun. We have sold the value-added products the whole of September. Okay. So yes, you are right that and that's what we said that in quarter 3 the margins according to us will improve further and further in quarter 4. Okay. But look, ultimately we have to test the water. We're just a very new player, and initially everything looks good, but we have to be there. We have to be consistent in supply, distribution, service, everything. So let's wait for a few quarters. Of course, yes, the margins improve, and we'll come back to you and we'll share the numbers happily.
Yeah. No, the idea, sir, because you said you sold something prelam in Q2 itself, because the realization, if I look on quarter Q1, obviously you had very low sales, but still your realization there was 28,546. And if I look at this quarter, it's 28,540. So there was no increase. So that's why I assume the prelam sales has not happened. That was my assumption. But
no, because see, also that you have to see the other mix also, how much of the interiors got sold in quarter 2. So what Sanidhya is trying to say, that maybe 1 or 2 more quarters, we will also get a lot of clarity in terms of the mix, what we are able to sell, how the market is panning out. So not many questions will get answered to us also internally.
Sure.
But your concern is right, and we are also hoping the same thing, that quarter 3 margin will be better than 2 and 4 should be better than 3.
Yeah. And just one more question was, you mentioned about 350 crores of investment in that new venture. Just how much would that go in FY24 and FY25 from an equity perspective?
See, I'll tell you on 300 crore over the entire phase.
Yes.
34 crore is the equity contribution. 300 crore I just mentioned. We keep the total investments on under 3 or 4 phase will be around 300 crores. Mm-hmm. Okay, out of which it is first 50-50. So our share is somewhere around, let's say, 150 to 175. Mm-hmm. And of that, 20% is our equity, let's say 20-25%. So roughly we are estimating over a period of next 3 to 4 years, 40 crore is the equity which we need to infuse. Most of it, however, maybe around 25 to 30 crores, maybe 25, maybe 30, will go in the next 12 months.
And just to get some more sense, in this business, I have no clue of this business, but in this business, assuming, we put 30 odd crores and the partner puts 30 odd crores, first full year of operations can give what kind of numbers? How do you look at this business?
First year you said, or you are saying overall capacity, what it will generate out of this investment?
So my first question was first year, then I'll come to the full utilization.
Well, look, first year, we are assuming right now that possibly we'll be able to commission the plant by the end of quarter one of next year, which means, let's say, June. Okay. The balance 9 months, we are hoping maybe we will be able to do a turnover of around 100 crores or so in the beginning. And, balance 9 months, 100 crores. Yeah, that's the maximum which we look at in year one. And since it's a 50-50 JV, the consolidation will be a line item consolidation. So the top line, the sales will not get added. It will not get consolidated.
Yes. And how profitable this business would be, sir?
Wow, actually, maybe by the second or third year of operations, the EBITDA margin can be extremely, extremely healthy. It can even go up to, for sure, 20% plus. It can even range 25% plus.
And just a follow-up here, sir. At full, assuming 300 crores of capex, 350 crores of capex is done, how much can the revenues be from that business?
800 crore of capacity is what it will lead to. Okay, but this is not something which is scalable like any other business. So incrementally we can assume in 3 years' time we should be able to reach to 3 years of full operations. We should be able to reach to around 300 crores, which can be a great number in year 3.
Okay, and who is the competition we have right now in the market?
Competition for this business?
Yes.
So the competition is Hetic, Hafele, and a few Indian companies like EPCO, Dorset, Godrej, small player, but Godrej also. And a few more international brands, but they are too minuscule. See, we will clearly get the advantage of being the second player in the country after Hetic to have a full manufacturing facility. And that will be a big advantage for us to get traction. And second, again, in our existing channel itself, there is a good possibility that we'll be able to create distributors because our existing channel is very bullish and very gung-ho on this new product line which we have spoken to them.
And just one thing on the plywood business, do you expect, obviously you have numbers for the month of October, but do you expect typically our premium share to go back to normalization in second half of this year?
Well, I mentioned this, and I mentioned even in my earlier calls that as a company, we still believe that we have the right products. Okay, we are the innovators, and our zero emission category is something which is really, we want to push this into the market, and we are seeing some new players also getting added with zero emission plywood. But at last 3-4 quarters, we have seen that the market has slightly moved towards the value segment. Okay, so that remains a challenge because the more we are able to improve it, it will help our margin to grow. That's a clear belief, and Greenply brand has always been the leader in the premium category, though we still maintain the leadership. But we need to grow. I can only say at this point of time, it's a desired statement. There are efforts, but we have not seen that result in the last 3 quarters for sure.
So any geography which did really well in Q2 for us in plywood business? Can you call that? Any particular geography which did really well?
No, I think, no. It's actually, no. We have almost grown well in most of the areas. 1% here or there, but the growth has been very similar across the country.
And the trend continues in October?
Well, again, quarter 3, as you know, is a festival period. Yes. And traditionally, quarter 3 will be slightly subdued compared to quarter 2. But I think, when you look at the macroeconomics at this point of time, things looks good. I have always been advocating this, that things look good for building material segment. Yes, some glitches would be there depending on some economic news and other things. But overall, things look good for branded players. If we continue to do the right things, we'll continue to grow in this business.
Okay. Thank you very much. Best of luck.
Thank you.
Thank you. The next question is from the line of Mr. Mohit Agarwal from IIFL. Please go ahead, sir.
Yeah, thanks a lot for the opportunity. I had a couple of questions. So firstly, a clarification on the MDF segment. You mentioned about the value-added products. Could you quantify during second quarter what was the share of value-added products in the 31,000 volume that you did? And where would you like to take it? I understand it will take a few quarters for you to realize that, but where would you ideally want to take it on a steady-state basis? And by when do you think you'll be able to achieve it, the share of value-added in MDF?
I think, at this point, it will not be fair to share. We would want it to be 100% ideally speaking, but that's not practical. So, totally depends on what the sales team can achieve, how much the brand can attract, and how much we can focus on our value-added sales. I think, time is going to say, and our hard work is going to speak that, how much we'll be able to achieve. For the last quarter, what we achieved, the team can share the data with you. You have it ready? Can you share it? You can get in touch with Mr. Nitin Kalani. He'll share the data, the share of value added for quarter 2. But going forward, I think it'll be unfair to decide how much it'll be. Our aim is for the highest, whatever we can, maximum. We don't want to stop on that.
But any ballpark, Sanidhya, any like a 50-60% share is what you'd want to achieve at least?
Ideally speaking, yes, but time will. I think time should say whether we can achieve it or not. But ideally speaking, yes, 50% should be exterior, HMR, boilo, pre-lam put together.
Okay, understood. My second question is on the plywood business. You mentioned, so we have 11% growth this quarter and 7% growth for first half. And you mentioned that the growth is coming in from value segment. Is it possible to kind of quantify how much is the value segment growing and how much is premium growing? Just want to understand the divergence between the growth rates of premium and value.
So the premium segment has not grown, as I mentioned in the beginning. The whole growth is in the value segment itself. And our mix was almost... earlier was 57-43 earlier? Premium to value? Value term. Was 57-43? Value term 57 and now earlier it was 58. The prior quarter it was 58%. Okay. Quarter it is 56%. And mid segment is 41% last quarter and Q2 is 43%. So 2% increase in mid segment. Okay. Have you got the number?
43% is the value segment, right?
Right. Yes.
Okay, understood. That's
1 year or maybe 4 quarters back, it was 37. So then you can see the shift from 37 to 43 over last 4 quarters. Right.
Understood. Perfect. That's all from my side.
Thank you.
Thank you, sir. The next question is from the line of Balaji Vidyanath from NAFA Asset Managers. Please go ahead, sir.
Hello.
Yes.
Good evening. Just wanted to understand, there is a metric that you track in terms of the pricing differential between the value ply versus the top end MDF, and if so, how the pricing differential has moved, because you mentioned that the value ply is doing much better in your overall price segment. So at what point does it becomes the customer becomes indifferent between top end MDF versus value ply?
I would say this. I think value ply is growing because the overall, if you see the pyramid of the plywood industry, the value segment is much larger and the premium segment is very small, and we are already having a significant share in the premium segment. Hence, the value is growing much faster than the premium. That is the plywood story because of the market. And I think MDF and plywood are clearly different needs of the consumers. And depending on different need and the consumer chooses, or the furniture manufacturer chooses, or the converter chooses, depending on the need. So I think they're very different needs. When he's coming in to buy value plywood, he's coming into the different mindset. When he's coming in to buy MDF, which is premium, or the cheaper MDF, doesn't matter. He's coming in with a different mindset because I think the end use according to an end customer might be, okay, at the end of the day, furniture is going to be made, but the type of furniture, the use of furniture, the finish the carpenter or the contractor or the designer wants to achieve on a given furniture in MDF is different to plywood. So, yeah, it varies. The need varies.
Yeah, and also, as Sanidhya is saying, when depending on the end consumer needs. So one clear differentiation still which remains in the country is, whether you are using it for your personal use and in residential versus, if you are using it in any of your investment properties or commercial needs. So in commercial needs, more of MDF gets sold for the reason because most of these OEMs or the high-end contractors who have set up a shop for making furniture, they want something where the thickness variations and nothing should become an obstruction to them. So for them, it is like mass production. But still, in terms of the product per se, there is a lot of difference between plywood and MDF. So the home users and everyone who wants a good longevity in their products, and they still relies a lot on plywood only. Second, MDF, again, there are different uses also, because MDF is much beyond furniture as an industry. So it has many other usages. Ply is purely furniture usage only.
So you're saying that the threat of cannibalization is very minimum in terms of sales?
Well, see, to some extent that cannibalization is going to happen, as I said, because for OEM, you will see slightly higher traction from on the MDF side, because in plywood it's a very natural product, and whatever one can do, but you may still see some level of thickness variation. Of course, that goes into micro but that is not something which a machine understands. So when it comes to OEM, people still prefer MDF because they get better productivity. The machine understands that. But when it comes to carpentry work, when it comes to labor, when it comes to reliability, strength, durability, then people still look at plywood as an option. And that in this country will continue for sure for long.
So the actual reason that I'm asking is I'm wondering why that, when there is a raw material price hike, timber price hike, why is it that, you're not able to rightly take a price hike in the end products, considering that the region where you're present doesn't have any import threat, at least in the southern region, there is threat of imports, etc. But being in west and north, there is very minimal import. So if there is a raw material pressure, you can rightly take a price hike.
Well, you're talking about plywood.
MDF.
Sorry, can you please repeat your question?
He's saying that, why can't you take a price increase further in MDF?
I think at this moment, price increase in MDF is not a question because, there's a lot of imports, number one. Number two, there are many people who have already added capacity or are in the process of adding capacity. So I think everybody is wanting to secure their own market share, secure their own customers, secure their own volumes. And at this given point, I don't think it is possible to further increase prices. In fact, to hold on to prices will be, a challenge.
I think if you really, ask us, our priority at this point of time is to scale up business, okay, without disturbing the price which already, others are able to get into the market, so that we maximize, our throughput and we maximize our margin also.
So this import of MDF is a threat even for your region, western region as well?
Yes, of course. Import of MDF is a threat to everyone. We are also very near to the port to that extent, but it's okay. It's all on the interior grade only. This also we have mentioned earlier that the whole import takes place only on the interior grade. And the imports, if you see last couple of years of data, maybe if it was around 10 or 11% of the total MDF business in country, it is around maybe 13 to 14% today, if you really look at of the total MDF, consumption into the country. And that's mainly interior grade. So that's where somebody earlier asked that, what is our plan on the VAP products, mix and sell. And that is where most of the MDF players in this country, they concentrate at.
Okay, my last related question on this is, if in terms of this Bureau of Indian Standards, there's a new rules that are coming in terms of import of food products and their quality, etc. So I just
sorry to interrupt you, Mr. Balaji. We are unable to hear you, sir. Your audio is breaking.
Hello.
You are not clearly audible.
Is it better now? Hello.
Maybe. Yeah, please.
So I was just asking, sir, in terms of this Bureau of Indian Standards coming up with a new notification for import of wood products. Wanted your views on that in terms of how difficult it will make the life for importers.
I think it will definitely make the importer's life slightly difficult. I think, however, this is applicable from the end of the year. So it's still a wait and watch, and how much will that help us, time will say. And it's good that the government is taking such measures to make sure that, Indian manufacturers are getting protected.
Thank you so much, and wish you all the best.
Thank you.
Thank you, sir. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please limit your question to 2 per participant. Should you have a follow-up question, we would request you to rejoin the question queue. The next question is from the line of Keshav Lahoti from HDFC Securities. Please go ahead, sir.
Hi, thank you for the opportunity. So as you highlighted in call, the timber prices are on par with north prices, but north price is currently, 30% higher than south prices. So how will you be able to compete with imports in western market when you have a higher timber prices? And what is your timber price per kg in Q2?
We'll give you the exact number. Q2 timber price will give you the number exact.
See, the prices of timber in north and west are almost similar. In south, also the prices have gone up. And today, if you really see, they are only cheaper by around, 1 rupee a kilo type, which would be in terms of percentage, maybe, around 14-15%, if you take that. So that's, but between north and west, there is no difference in the landed price.
And we are not trying to compete with the import, We are selling at a much higher realization than import, Import average realization is 19,000-20,000 rupees a CBM, while our average realization for interior grade in the trade is about 25,000 rupees a CBM. And as you keep going higher, exterior, HMR, boilo, it keeps getting higher, In boilo, for example, our realization would be 65,000 rupees a CBM. Though the sales volume is very low, but, we are the second player in the country to have this category, There's nobody else in the country which has this category.
Got it. No, my point was more from when it's the import price and your price differential becomes, to bigger than 20%, then people might, decide to shift to imported products because of the pricing difference. So possibly if you have a higher timber price at your end, you need to sell it at a higher realization. So possibly that makes room for import to gain market share.
See, to some extent, as I said that, we see a 1 or 2% increase as a total percentage of consumption in India on the import side. Okay. But you have to also understand that, like today, in West, we can even serve a very small quantity. We can serve the quantity to the end user on a daily basis. When it happens to import, they have to carry certain amount of inventory. Also, once the price is decided, maybe they get the consignment after 1 month or 2 months. So the uncertainty over, what can be the price after a couple of months. So there are factors. Otherwise, today import would have been big time into this country. Yes, it is a decent number, but the traders also understand that there is always a plus and the minus. The pros and cons are always there for anything which we import into the country.
And mainly on interior grade, The fight with import is on interior grade. It's not on other grades.
Understood. Got it. One last question from my side.
Sorry to interrupt you, sir. May we request you to join the question queue?
Yes.
Thank you. We'll take the next question from the line of Kushagra from Old Bridge Asset Management. Please go ahead.
Yeah, hi. Thanks for the opportunity. Just 2 questions. One, given that you are already on 52% utilization levels in MDF segment, where do you see your cost per CBM settling in for your interior grade MDF? If you can give some color over there, that will be helpful. So we have seen a comparison. I would say we have seen some of the larger players report or sort of clocking around 17,000 to 18,000 rupees per CBM. I'm just trying to get a sense of where will you settle in once your utilization levels ramp up.
I think it will be too early to say. I think at the end of the year we'll be in a better position to reply on this, because if you look at the number of months, from 5th May we started, so it has hardly been 5 months of operation till quarter 2 end. So it's still too new to comment on this. A lot of our costs might be slightly higher today because the volumes are comparatively lower. We are slightly a newer player compared to others. So it won't be comparable. By the year end or next year, quarter 1, we'll be in a position to give you a real picture.
Yeah, at this point of time, the overall margin which we are able to derive from the business for the next few quarters will be relevant, will be the factual thing. Because we also get to know and we have to also understand our cost structure. As Sanjay is saying, we might be, and this is one business where, you get better consumption propensity only with maturity. So we will also continue to improve on the cost structure. Those are other, sweet points which are still there. And that's what we understand about the industry, that it takes around anywhere between 9 months to 12 months minimum to mature on the cost side. So there would be breakdowns, there would be stoppages, there would be, new samples, there would be a lot of things which initially we would be experimenting with. So I agree with Sanjay that, these questions will become more relevant sometimes next year.
All right. The second question is on capital allocation. So the sense which you gave on the JV in terms of investments and asset turnovers and EBITDA at peak revenue, the broad math says that the payback terms should be 5 to 6 years. So if you can confirm to that or something more to it. And a related question is, what are the debt levels which you are thinking of carrying on your balance sheet over the medium term as well, given the amount of cash flows which you will be able to generate henceforth?
So first question on the hardware, I've just given a ballpark number. You never know. Maybe in the first 12 months itself, because we have a good distribution strength, okay, and the product qualities are very good, and cost-wise, we would be definitely much better because we would be manufacturing. I said 100 crores. We might even look at maybe doing 200 crores in year 1 itself. So it's too early. There's no point right now commenting on payback and all those. I've given you the ballpark thing. Yes, the margin profile is good. It's more than 25% because these are all high-end, engineered products. And the total investments over the phases, what we have agreed with the JP partners, is anything between 300 to 50 crores. And that can give us a capacity of 800 crores in terms of manufacturing. So these are the facts at this point of time. As we mature, maybe next year, we'll be able to share a better perspective on the same. It's too early, what is the point of commenting on these things at this point of time?
All right, just on debt and thanks. All the best.
On the debt side, like we have given a guidance that, one, as an organization, we want to be within a debt equity of 1 at any point of time. We also said that we will peak out our debt somewhere around 750 CR. We still maintain that. And the whole idea is finally to be within that this 1:1 level.
Sure, all right. Thank you. All the best.
Thank you.
Thank you. We'll take the next question from the line of Akshay Chheda from Canara Robeco. Please go ahead, sir.
Yes, sir. Thank you for the opportunity. So just one question. So how should we look at this 9% volume growth numbers, sir? Is it that finally demand is coming back in plywood? Of course, you did mention that the third quarter because of seasonality would be weak, but would it be that fourth quarter would be better than second quarter and then FY25 will be better than FY24? So do you think that things are improving from here on or too early to call?
Well, for this year first, yes, quarter 3, as like any other year because of a lot of festivities, is always a subdued quarter. So the quarter 3 numbers, possibly will be, and should be lower than the quarter 2 numbers. But quarter 4 again, the number improves because that's a good season. So for the full year, as I said, we are at 7% right now in H1. We are hoping that if we are able to clock around 9% in H2, then for sure we are at 8% volume growth. And as I have always maintained, in plywood business, if we do the things in the right perspective, and if we don't have any supply side challenges, then we always will try to grow the volume between 8 to 10% for next few years for sure. Even though the market doesn't grow, but I think the shift from unorganized to organized and our own better working, our own performance will help us to grow to that extent for sure, between 8 and 10%.
Okay, sir. Okay.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for the day. I would now like to hand the conference over to the management for closing comments.
Thank you all for taking time to participate in this call. In case of any further clarifications or queries, please feel free to reach Mr. Nitin Kalani. Thanks again and goodbye.
Thank you. On behalf of Asian Market Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.